Welcome to another stage analysis video. It's Sunday the 12th of October 2025. Gonna start off this weekend's video with a look at what's going on in the major indexes after the end of week decline, as obviously a change of behavior that we haven't seen for a little while in the markets. Didn't do a watch list post this weekend with the increased volatility, just see where things settle on Monday before getting back into those again. So we'll start off today with a look at the major indexes, starting with the S&P 500 here, which you can see it's down 2.43% overall, just pulling back in and closing right at its 10-week moving average at the end of the week here. So we're still obviously moving forward in stage two at the moment, but this is the significant pullback like we saw last time in the end of July, start of August. We had a brief pullback towards the 10-week moving average before rebounding again. So whether that happens again or not will remain to be seen, but we have similar kind of movement in the percentage of stocks above their 50-day, 150 and 200-day moving averages, where it's actually dropped below the key moving averages in the short term. So that was recovered very quickly at the start of August. So at the moment, we're in what we call a difficult environment, even though we're still in stage two here. So a little bit more defensive because of that, obviously, coming up here. So if we go down to the daily chart here, you can see the percentages of stocks above their 20-day moving average in the S&P 500 dropped down into the lower zone on Friday there, below the 30% level. So we haven't been down into the lower zone since back in April, and previously started to drop off into that in March, the previous time from there. So this is the area of interest at the moment. Obviously, the move on this with short term is when we start to see a rebound back up out of this zone again. So a move back through the key 30% level again is often a short term signal of this, that it's obviously got to an oversold level and then starting to pull back out again. You can also see at the moment approaching the 50-day moving average here as well. So in the weekend, really thin non-market trading we've seen with tweets coming out from the president. We've seen some rebound in the obviously after hours moves, etc. So markets move back up a little bit up into this kind of area at the moment, but obviously that could change with when the real futures open a little bit later with the Asian session and then the European session. So still a long way to go to see how this plays out here. But this is what we call a significant bar, and when we have a significant bar, we tend to want to see it start to get back through the midpoint of that either very quickly in the first day or two. Otherwise, that was generally a sign of weakness, and then you could see it obviously a rebound into that area. If it fails to get back through that and starts to roll back over again, we could see a continued move lower in the near term there. But if in the short term it manages to get back through that 21-day moving average very quickly, then the upper end of this bar on Friday is our near-term resistance on this at the moment. So although it was a significant move on Friday, you can see it took out like almost best part of a month's trading in a single day. It was a short-term flush, so chances of a swing low in the near term are quite high for a short-term bounce at the least. But it will be, as I said, dependent on how strong that bounce is to whether this actually then continues rolling over, or we see obviously a little bit more of a continuation of the trend. We remain stage two at the moment, but we are currently with Friday's close below the minus 180R level. So we've moved into a sort of near-term downtrend position. But as I said, the out of hours trading has started moving back through that level again. So Monday's price action will be key to see whether this is an actual change of character or just a short-term blip in what's going on. If we look at the Nasdaq as well, you can see very, very similar price action to the S&P 500 there, 2.27% off on the week. So biggest decline for the week that we've had since, again, back at the end of July, early August period there. So that period, even though it rebounded, did end up with a sideways range for a month or so there. So we could see a similar type of thing again. We have only just hit new highs once more again last week. So 54% of the NASDAQ 100 stocks at the moment above their 200-day moving average. So still in the healthy range, moving into what we call the neutral zone. Anything below 60%, 40 to 60% range is the neutral area of this. So still a healthy uptrend at the moment. The pullback, it's a change of behavior, but it isn't yet a change of character. And again, we look at that on the daily chart. You can see we're into areas of potential near-term support. Recent swing low from here, and then the pivot highs where we had the last continuation breakout. So we are into an area, and the 50-day moving average coming in. So potential area of near-term support. It would obviously depend to see whether that holds or not, but obviously is an area where short-term traders would potentially like to come in and attempt to buy the dip there. So it will, as I said, with the S&P 500, similar kind of thing, looking for a move back through the middle portion of this significant bar. So, but in order to obviously negate that completely, we need to see it recover the entire bar, start to get back above the top portion of it. But in the near term, you'd want to see this resolved within a day or two back to the upside and back into the upper range. If it fails to do that, and if we see it consolidating in this kind of area down here, then that would be a potential sign of weakness, and then we could see a further test down lower to the 50-day moving average and potentially further down to other areas of support, so previous levels back down here if that did happen. But again, last time this happened back in August, we did see a quick movement back out again, back across the range to a new high, and then went sideways for a month or so. So it would be key to how this behaves on Monday and Tuesday. We look, oh, not that one, that's the equal weight chart. Didn't want to show that, but may as well. Equal weight chart, similar kind of thing. You can see this bar, obviously an outsized bar compared to what we've seen in the recent months since the stage 2 began back through here. Obviously that's the biggest negative bar we've had at the moment. So, and again, percentage of stocks above their 200-day at 54% there. Russell 2000, again, massive bar on the weekly there, taking out 3 weeks price action or so in terms of the closes there, but still above rising 10-week moving average, still in stage 2, obviously only just coming back in from the highs. So in potential double top position here for this at the moment. So once again, we'll see how this reacts, whether it can get back through the core part of that significant bar, or whether it starts to roll back again through here, or we get some sideways action. So only 44% of stocks in the S&P 600 here above their 200-day moving average, so slightly weaker, but still in that neutral 40 to 60% range there. And on the daily, again, closed just below the minus 180R level. So this is the minus 180R level compared to the 21-day moving average. So it's the first time it's been below that since back in that August, early August, end of July move there. So if it remains, starts to close below this for multiple times, then obviously sign of weakness, short-term downtrend in that case. But at the moment, obviously, as I said, overnight trading, etc., pulling it back into this kind of area at the moment. So we will see again how this acts on Monday. So 15.5% of stocks above their 20-day moving average. So moving into the lower zone as well for this. So move back through the 30% level is what we'd be looking for on this, in terms of looking for reversals back to the upside again. But if it remains in this lower zone, which you can see through March, obviously remained in the lower zone for many weeks, had a rebound back as it got back towards its 21-day moving average, and then dropped back through it in the early part of April again. So this kind of area here, when it starts to recapture that 30% level, is where we start to get interested again from a short-term perspective of the trend starting to turn around again. So you can see this is obviously a healthy spot in most cases with these kind of things. So as you start to move back up, so that one started to roll back over again, started to get knocked out as it dropped back down into the lower zone again. But that's where we start to take a look with these kind of things. And you want to see it not just on a single index, you want to see it across all of them at the same time. So NASDAQ, NYSE, the NASDAQ 100, the S&P 500, the Russell 2000. You want to see all of them moving in tandem, not just a single index with that. You want to see broad-based breadth coming out of that lower zone as such. We look at the VIX as well with what's going on. Friday's move, obviously massive spike on there, significant bar that we haven't seen for a while. So it managed to, again, that August move did spike back above the 200-day moving average, recovered it in a single day. So if it gets back below this 200-day moving average quickly, will be key for this. So if it does manage to hold above that and then continues trending up through here, then that would obviously be a major sign of weakness. But if we start to drop back through this level, then that would be a potential positive. So we want to see it on this half of the ledger, not on this half of the ledger. So at the moment, in a dangerous position, so difficult environment at the moment until we see obviously some of the price action on Monday and Tuesday, how that shakes out.